Welcome to Retirement in a Nutshell, and this training video on how our patented backwards calculation of client living expenses works. One of the unique features of Retirement in a Nutshell is how it handles client living expenses. It accurately establishes the client's current living expenses using a backwards calculation that is very simple and straightforward. An inflation rate is applied to that number to determine the target expense or income need in each future year. It can sometimes be confusing to new subscribers because they haven't used or seen this approach before. It is faster and more accurate than the usual methods of either having clients itemize expenses or the goal-based approach of asking clients how much they need in retirement, which can be subjective. Imagine using the goal-based approach and asking a client what weight they would like to be in retirement. To prepare a weight plan, wouldn't you need to establish exactly how much they weigh today so you have an accurate, current reference point to measure their progress and establish reasonable goals for future years? In the same way, it is extremely important to establish the client's current living expenses as accurately as possible because it becomes the reference point against which all future cash flow will be compared. They know how their current standard of living feels, and it gives them an internal measuring stick for evaluating future cash flows. If the current living expense calculation is off, the information you are presenting to the client will be off and could give a false picture of their income and cash flow in retirement. The basic calculation works like this. If you take a person's gross income and subtract income taxes and subtract what they are saving, the rest is spent. If they aren't saving the money they receive, they must be spending it. This accounts for every dollar. If a client looks at the calculation and says, "We're not spending that much," then your next question is, if you're not spending that much, where is the money going? You must be saving it somewhere. It forces them to disclose where their money is going if it isn't being spent. Income is gross income from salary, self-employment income, income from investments or rental real estate, or other sources. It is basically the money that goes into your client's pocket or banking accounts each year that is available for living expenses. What constitutes savings? Money that comes out of their paycheck that goes to Social Security or to a defined benefit pension is not money they have to spend and is considered savings for income later. The program automatically subtracts Social Security payments and defined benefit contributions from their income when you check the Social Security boxes or enter a percentage for defined benefit payments when entering these items on the income data entry screen. Money taken out of paychecks for health care or Medicare contributions are not considered savings, but are part of the client's normal living expenses that will also be there in retirement and therefore are not subtracted in the backwards calculation. Savings also includes obvious things like investment contributions to 401ks, IRAs, and investment accounts. These are entered under the investments data entry screen. What may not be so obvious and needs to be accounted for are savings that are building up in a bank, savings, or checking account. If the client's paycheck goes into their bank account and they are not spending all of it each month, that is savings and needs to be entered as an investment account that you can call bank savings. If the client is not sure how much is being saved each month, or it varies from month to month, ask them how much it builds up in a year and divide by 12. The program also accounts for living expenses that are temporary. These are expenses that will go away someday, like payments for a mortgage, auto, or other loans. These items are shown on their own line in the cash flow report, so you and the client can see when they go away and how it impacts their cash flow. Most clients know how much they are paying on their loans, but they can forget to tell you about temporary out-of-pocket expenses like college or private school payments. Maybe they have temporary extra expenses for a parent's health care or certain work-related expenses. There is a drop-down item on the Loans and Liabilities entry screen called Extra Cost Items, and they should be entered there. The program subtracts these temporary expenses, which leaves the bottom line we refer to as living expenses that continue for life. The living expenses that continue for life would include items such as food, utilities, property taxes, insurance, healthcare costs, charitable contributions, travel, and entertainment. Basically, is what they spend every month to maintain their current lifestyle. This represents their current standard of living. The clients know what this feels like, and it becomes the reference point for future cash flows after you enter the factor you want to use for inflation. The program then calculates their future expenses and how much they will need to maintain their current standard of living. The program compares these future living expenses to all future sources of income and lets you and your client know year by year whether they will be better off, about the same, or have shortfalls they will need you to help them address. Calculating living expenses this way avoids you or the client having to try and itemize these items or guess how much they might need in retirement. It avoids them having to tell you how much they give to charity, or how much they spend for counseling or a child's rehab. If you get the savings and temporary living expense items right, it gives you the most accurate number for the living expenses because it accounts for every dollar. It also saves you and your client a lot of time filling out forms and trying to estimate costs. That concludes the training for understanding the backwards calculation of client living expenses. If you still have questions, please look in the frequently asked questions list or call our toll-free number and we will be happy to help you. Thank you for using Nutshell.